Hello, everyone. Welcome to Construct Innovate webinar series on innovation and entrepreneurship. And today's topic of the webinar is R&D tax incentives and credits. My name is Magda Hajdukiewicz. I'm a co-director of Construct Innovate, Ireland's National Research Centre for Construction Technology and Innovation. And today we have two speakers from Deloitte. The first one is Brian McDonnell, Specialist Research and Development Tax Credit Advisor. And we also have Cathal, Noone, partner at Deloitte. And Brian and Cathal will go through those R&D tax incentives. So we're going to start with the presentations from Brian and Cathal. And if there are any questions, please put them, type them in the Q&A box at the bottom of your screen, and we'll come back to them at the end of the presentation. So enjoy the presentations, and I'm going to ask Brian and Cathal to share their slides whenever you're ready. Perfect. Thanks.
Excellent. So thanks very much. Hopefully you can all see those okay. Yeah. So, cool. So just to introduce yourselves, I suppose my name is Brian McDonnell. I'm Senior Manager in Deloitte's Global Investment and Innovation Incentives team, which look after R&D tax credits, all types of grants, and whether it's for innovation, R&D, sustainability. We assist companies with EI, IDA, SEAI, and revenue. And joined by Cathal.
Hi guys, I'm Cathal Noone. I'm the partner of the group, so I oversee a lot of the big claims that go through to the Irish revenue on R&D tax credits, and help with EU grant funding and IDA and Enterprise Ireland funding for companies. So we want to give you a quick introduction today because historically the construction sector in Ireland hasn't been the best at utilising the opportunities available to them in the R&D tax credit space. When we talk to our colleagues in other geographies in the UK, in Northern Ireland, throughout mainland Europe, they actually see quite a lot of claims in R&D tax credits in this sector. What we thought would be kind of good to focus the mind and get people thinking about, well, actually, what is R&D in the construction sector? What are R&D tax credits? How are they structured? How do you think about them? What can we claim? What is the technical requirements to fit within the framework? And then just to give a high-level overview for people to at least put it on your radar initially, and then think about your individual project and see if they fit within the framework. So this is us. Like we're part of this global group. We look after this all over the world. We have 1,500 people who specialize in this space globally, and all of us are STEM or science or engineering graduates. So even though we technically sit within tax, we aren't really tax people. That's what I have to tell myself anyway, even though I don't know if I can claim that anymore. And it's an interesting space from our perspective. We get to talk to companies from all different areas of STEM, understand their technical projects, take a deep dive with their engineering and technical teams, understand what they're trying to achieve, and help them basically fund those projects through incentives. So it's a really interesting place to work, and we get to do something different every day and see all of the different projects that are happening throughout the country. I'll move on there, Brian.
Okay, so I suppose just to give a quick overview in terms of what we mean by incentives and where the R&D tax credit kind of fits in within the overall structure of it. I suppose as part of the whole series of webinars that you're doing with Construct Innovate, you're probably at this stage aware of some of the SEAI funding in terms of, Exceed and other capital investments that are there, Enterprise Ireland funding in terms of RD&I. And I suppose the other things that we just want to call out are, I suppose, really, are there opportunities around other types of funding that are available? So, from an EU perspective, are you undertaking any projects that could be falling under the remit of Horizon Europe? Or if they're further on in the development, looking at the EU Life or the EU Innovation Fund, where you're at that demonstration phase, or constructing kind of first of kind demonstration models. But also, I suppose what the main focus of the call is around the R&D tax credit and revenue incentives that are there. So you probably have some awareness or experience with capital allowances, be they industrial building allowances, wear and tear, or accelerated capital allowances. But what I suppose we haven't seen to the same extent in the construction industry, as Cathal has said, is around R&D tax credits and seeing if there's actually potential to make some claims in that space. The work that we do is trying to help companies to put a strategy together. So if you look at the total investment that's required, what we want to try and do is reduce that investment requirement for the company. So if you look at an overall project that's there of €1 million, there's potentially getting grants of 25% from Enterprise Ireland. There's other EU funding that could be at a higher percentage. But that reduces that investment requirement down substantially. And then is there an opportunity to, I suppose, leverage that even further by looking at R&D tax credit claims, seeing if there's a possibility of getting that 25% where you're almost meeting 50% of the overall investment requirement for any project then. So hopefully our aim is to try and bring this to your attention, see if there's, I suppose, at least try and give an overview of the understanding what could potentially be claimed. And I think we go through that in some further detail now in terms of the R&D tax credit.
And look, if you look at the Irish economy and how it's been structured for years and why so much of pharma and tech are based out of Ireland, a large driver is the R&D tax credit. But it's not specifically designed for those industries. It's anyone working in any type of experimental development across multiple different fields of science or technology, developing something new or trying to do something innovative or different. So while it's a core part of our overall economic structure and attracting high quality employment into the country, it is available for any company in Ireland who are meeting the technical criteria. So for us, the technical criteria are kind of arbitrary overarching rules that apply across every field and fit within every company. Every company has equal rights to claim this. It's a 25% credit against qualifying expenditure. So it's a very significant incentive. That's going up to 30% from 1 January 2024. So any financial period starting after the 1st of January 2024 can see 30% of R&D projects been funded through a refundable tax credit. So even if you're in a loss-making position and you're not paying any corporation tax, you can still get paid 30% of your project's costs back as a refund from the Irish revenue. There's lots of different elements to it and lots of different costs that can be included and lots of different requirements. Obviously, this is still tax. There's still a compliance burden associated with it, but we'll run through quickly the technical pieces that are involved. And there's kind of 3 core pillars that we have to look at when we're saying, can a company claim R&D tax credit? And the first question we're going to ask is, does the company itself qualify? Have you got the financial records there to support how much these project costs and how much you're spending on individual elements of research? And then lastly, does the research meet the technical requirements needed to fit within the overall legislative framework? So we'll run through each one quickly. We'll focus mostly on the science test because that's the subjective element. To a large extent, we should probably start we don't start in the opposite direction. We always check this one first, the qualifying company criteria, but the science test is the subjective element that really needs a technical assessment and you need to think about it, and it's somewhat subjective. And it's where companies qualify or don't qualify. To a large extent, the accounting and tax analysis afterwards is, I won't say rudimentary, but the data tends to exist. The information is there. The financial records are there. You're not running a company and keeping track of those things. Well, at least I hope you're not. They exist. We can backfill them, but the fundamental technical analysis from the science perspective is the core. And there's a couple of core questions that Brian will run through in a minute. But first off is the qualifying company criteria. So an applicant, to claim an R&D tax credit, you must be a company firstly. You can't be an individual. You can't be a sole trader. You must be a registered company subject to corporation tax in Ireland. The company has to be trading. So you have to be deemed a trading company from a corporation tax perspective. you must be taking R&D activities within the European Economic Area or the UK. So again, you can't be doing all your R&D in the US or another geography, and all of the costs incurred in the project must not be deductible in the corporation tax calculations of another company in another geography. So you can't be doing all your R&D work in Spain and taking a corporation tax deduction for the costs incurred in the project in Spain and including an Irish corporation, an Irish R&D tax credit claim. So it's really costs incurred by the Irish company in Ireland for a trading company that is subject to Irish corporation tax. That's the qualifying company criteria. Pretty much anyone who sets up an Irish company should be broadly within that framework. Sometimes there's a time lag between when a company is established and when it begins to trade. If you're incurring costs on R&D projects before you begin to trade, they can be claimed when you begin to trade. So there's lots of technical pieces around that, but that's the broad criteria. In terms of what's qualifying then from an accounting perspective and what costs can we layer in? So when we're looking at 30% of a credit against qualifying costs, well, what are qualifying costs is probably a good question. The first piece we always look at is the payroll element. So in order to be saying you're carrying out R&D, people have to be carrying out R&D. So there's always a payroll element. If there's no one carrying out the R&D work, it's very hard for us to say there's R&D activities happening. So payroll is the first thing we look at. So if you have a project, let's say, again, we'll talk about an ideal world scenario here, which isn't actually practical, but again, this is an overview to give you a sense. If you have a person working on an R&D project and we say that's a fully qualifying R&D project and that's all they work on in the year, we look at the total emoluments for that person from the company. So their full payroll, employers' PRSI, employers' pension contributions, whatever benefits, BIKs are associated with that person, we'll say they're all qualifying costs and we'll take 30% of those costs into an R&D tax credit claim. Then we kind of go, well, what other costs are associated with the project? Direct input costs, usually material input costs, testing costs, maybe equipment costs. So capital costs can qualify if you're buying equipment to do tests, if you're buying specific pieces of machinery to do a specific analysis. We look at all of those costing elements that contribute towards a project, and we either say, well, that's fully allowable from an R&D tax credit perspective, or a portion of it is allowable because it'll only be used partially over the useful economic life of that company. Once we kind of built up those internal costs and get an idea of how much is actually qualifying, we look at things like external subcontractors. Are you partnering with a university to do part of this research, and are you paying that university to do that research? If that's the case, you can include those costs too. That there's caps and limits on them. It's a 100,000 euro or 15% of that internal spend that we've already calculated as the upper limit to the cost that you can include. The reason for those limits is kind of down to the fact that what this credit is trying to create is employment within that STEM sector. In Ireland, they don't want you just outsourcing all of the activity to other organizations or other places. They want to encourage employment and good quality STEM employment within the country. So they cap the amounts that you can include. But at the same time, 100,000 euro of university research is a lot. You can include the same amount from external third-party subcontractors as well. So as long as they're not related to you in any way, subcontractor costs, paying people to do an element of the research on your behalf, can be included in the claim, subject to the same caps and limitations, which is 100,000 euro or your 15%. The important thing, obviously, here is the costs need to be tracked, and we need to track these costs against the project. So when I'm saying in an ideal world, here's a person working on a project that's 100% qualifying, that's never really the scenario we find ourselves in. People might work across a couple of different projects. They might have 50% of their day is on this and 50% on something entirely different. We need to start tracking time and tracking activities and tracking where costs go. If you don't maintain those type of records, revenue will likely challenge your claim and say that you haven't maintained the books and records required to quantify your R&D tax credit. So there's a books and records element and an accounting element, but again, I'm not going to focus on that too much at this point in time because the core assessment is really on the science test. So what is R&D? Fundamentally, what is the science test? And believe it or not, this is pretty much the entire definition. Well, this is the entire definition from a legislative perspective. There's obviously a lot of guidance and nuances behind that, and Brian will run through in more detail what each of these points mean, but there's a kind of a 5-point test on this. Is the activity systematic, investigative, or experimental? Is it in a qualifying field of science or technology? And they're defined we have a defined list of qualifying fields of science and technology. The R&D must fall within one of the following categories: basic research, applied research, or experimental development. They must seek to achieve scientific or technological advancement, and they must involve the resolution of scientific or technological uncertainty. That is the entirety of the science test from a legislative perspective. So as you can see, pretty open to subjectivity. I think every person on this call will likely have an entirely different interpretation of what each of these points mean. But we're going to run through now from a practical perspective what they mean, what the Irish Revenue think they mean, and what we want you to think about when you're trying to say, well, actually, do we fit within that science test reference? I'm going to hand you over to Brian to do that.
So I suppose the most important part then, is actually being able to identify what qualifying warranty is for your company. So as Cathal had outlined each of the individual points, this is just a bit more of a deep dive into what they mean in the legislation. So the first point that was mentioned was the work systematic, investigative, or experimental. So by that, what revenue are looking to see is that there was a planned and logical approach being undertaken to the work, that you have detailed documentation there, not just for the finances, but also in terms of the activities themselves. So was there a project plan in place? Was there, anywhere written out in terms of meetings or minutes or somewhere that set out the original goal of what the project was and what you're trying to achieve? Because ultimately, if you think about it, if revenue do come to audit this, they go to audit from a financial and a technical perspective. They're going to want to see some evidence, some documentation to be able to show that there was a project start date, that there was some due diligence done in terms of technological challenges associated with the project, and that you were making or maintaining records then in terms of each step of the project as you were going through it. So if one hypothesis failed, what was the next step that you were going to take? What's the planned work that was going to be carried out, and what were you learning from that? I mean, ultimately, you're trying to show that revenue, that you're gaining new knowledge from the work. Without documenting it, you can't really demonstrate that new knowledge has been gained from it. So in terms of what revenue you're looking to see, it's finally, is there an audit trail? Have you got evidence in terms of the project and its evolution over time? And can you demonstrate, the complexity of the work, how difficult it was to actually achieve it? In terms of field or science and technology, I suppose there has to be a qualifying field. If you look at your team that are undertaking the work, what are their qualifications? In what area are their expertise? Revenue want to see that competent professionals are undertaking the work. And they also, when they do audit it, they're going to pick from an expert panel. So they need to know, well, what is the field of science or technology that we're going to be looking to pick our expertise from? In terms of the construction industry, I suppose, the main ones that you'd focus on are probably around the engineering and technology, looking at civil engineering, building science and engineering, construction engineering, architecture, material science. But there's also potential for like software development to come into that. I suppose medical and agricultural sciences are highly unlikely to be in there, but it's looking at other types of disciplines that could fall into it. Is there work being undertaken in terms of, I suppose, structural surveys, looking at other types of engineering that might be feeding into it that you wouldn't commonly associate with construction, but may play a role in terms of the overall R&D project that's been undertaken. I suppose one thing to consider within this is that revenue have also called out specific areas that aren't going to qualify. So within this, it's the routine activities around it. And I suppose if your overall project is relating to the construction of a new building, you're going to have to try and call out the specific element that's R&D as opposed to the entire development and building of a facility, because it's already been called out from revenue's perspective in the guidelines that, I suppose, relocation, construction of a building isn't strictly R&D in its own right. So those routine activities are not going to qualify, but, it's looking at, well, what are the types of projects that have been undertaken, and there's R&D going into specific aspects of that, which could be claimed, as opposed to looking at the wider kind of, end product and application of the R&D.
And just to highlight there, like the fields that you see listed in that, they're defined qualifying fields. So anything within those fields is technically within CES definition. So if you're working in engineering, you work in construction engineering, you're in a qualifying field of science. They are defined as qualifying. Material sciences is defined as a qualifying field. So when I said there's 5 assessments, one of them is field of science technology. If you're working within one of those fields, you tick the box from a field of science technology perspective.
The next point that was called out is in terms of the category of research that the work has been undertaken in. So revenue defined 3 different categories. There's basic research, applied research, and experimental development. Realistically, the majority of claims are falling under experimental development, and that's work which draws on scientific or technological knowledge, practical experience for the purpose of achieving an advancement. And so what we're really looking at here in terms of an advancement is, looking at improvements to, I suppose, the development of new or improving existing materials, products, devices, processes, or incremental improvements there too. So by incremental improvement, what we're trying to show is that the work that you're undertaking is seeking to achieve a step change in the existing technology or capabilities that you're working on, but that in undertaking this work, it doesn't have to be completely groundbreaking. It doesn't have to be blue sky research. It can be part of an existing process there. But what you have to be able to do within that then is demonstrate that there is an advancement and uncertainty associated with them. So when we speak about advancements and uncertainties, these are really the most important points from revenue's perspective in determining whether a project is qualifying R&D or not. You have to seek to achieve. Now, seek is important because you don't necessarily have to achieve the advancement. You can fail, but in doing so, there must be an uncertainty. So you have to seek to resolve an uncertainty associated with it. If you're confident that you're going to achieve your end goal at the very outset of the project, then the fact that there is an uncertainty associated with it is very small. So you have to be able to demonstrate that there's a technological challenge, that this work hasn't been done before or hasn't been done in the same way that you're seeking to achieve it in the past. And when we talk about, I suppose, a level of ambiguity associated with the scheme, this is really where it comes in. It's trying to define, what are the advancements, what's the new knowledge that you're seeking to gain, and what are the challenges and uncertainties associated with achieving. So what is an advancement? Advancement is, I suppose, an overall increase in the knowledge or capability within the field of science or technology. It's not just looking at the company's own capabilities. So it can't just be the first time that we've ever done this. It has to be looking at it from the wider industry perspective. There's always, as I said, there's always resolve or must seek to resolve a scientific technological uncertainty when you're trying to achieve that advancement, because without that, it's just purely innovation. So there's a big differentiation between the R&D tax credit and what you may be familiar with from Enterprise Ireland in terms of RD&I funding. For research, development, and innovation, which is that I in the RD&I, you're able to have an advance without the resolution of technological uncertainty. For the R&D tax credit, if there's no uncertainty associated with it, it's not R&D. So not only must you define what your advancement is, but you have to be able to identify what that uncertainty is, how it's linked to that advancement, and then to be able to show what work was being undertaken, because that's what comes down to your qualifying activities. So where we're looking at an advance, and what we mean by that, it can't be readily or reasonably available in the public domain. So revenue will often look for, what was out there in the public domain. You have to be able to show what the state of the art was. You have to be able to demonstrate, why you needed to undertake the work. And, when it comes down to what's readily available to you, is it published in academia? Is it published in engineering or trade journals? Are there competitors out there who are doing something similar but have got it protected by IP? If one of your competitors is I suppose, actively achieving some of the work that you're trying to replicate, and that's your advancement in trying to do that. You're not going to be disallowed from claiming. You can still claim once there isn't, I suppose, readily available information. If you're, trying to achieve the same outcome but by through a different route to overcome IP protection, then that's still R&D, because it's still looking at an industry advance and not just for yourself.
A lot of the time, guys, in this space, it's about contextualizing it. So, like, someone's done something similar somewhere else before, but actually you're doing it. You have to contextualize why it's different and why it's more complex, or why additional criteria in what you're trying to achieve makes this more complex, or means you can't just apply existing knowledge that's already out there and assume it's going to work. It's going to require some type of iteration or validation. So it's contextualizing the problem, outlining all of the areas that make this specific thing you're trying to achieve, the specific advancement you're seeking to achieve, different to what's already published. So again, people, and this is broadly, I think it's broadly true, people don't spend loads of time trying to recreate the wheel unnecessarily. If there's an easily available solution, people will go towards the easily available solution and deploy the easily available solution. People tend to fall into an R&D cycle when they actually go and look at, well, we want to do this. Here's kind of things that are similar, but not the same. I can take some of the learnings from these pieces, but actually I need to get to the next level and do something different to achieve what we're trying to achieve. And they're the incremental improvement, incremental changes. And a lot of what is important from a definition of your overall technical advancement is clearly calling out those criteria and kind of saying, well, this is why this is different. This is why we had to do this work. This is why it was harder. So fully contextualizing purely from the technical scientific perspective, why this represents an advancement. And it's important, again, when you're thinking about this, how easy is it to define something like that? And we're not talking about defining it and explaining it to a revenue official on the ground, a person who looks after tax returns all the time. You'll be explaining it to an academic or a person working in your field from a university who revenue will hire to make the scientific assessment on your behalf. So you're explaining it to a peer or a person with a similar type of qualification to you. So it's about defining it from a technical perspective in a way that they'll appreciate and understand this is what we're trying to achieve, and that's why this is new or different to something that already exists. That's, I suppose, where the art of claiming an already and defining advancement comes. It's about clearly contextualizing it from a technical perspective to show why it's different and new.
And then I suppose it's also like linking the uncertainty to that advancement. So I suppose when we look at uncertainty, I suppose, like Cathal said, it's something that shouldn't be available, or the method in terms of arriving at a solution shouldn't be a bit like readily apparent to a skilled, experienced professional working in their field. So like Cathal said, if this does come to a scenario where it's going to be audited by revenue, there will be an expert panel. It will be someone from academia or someone from industry with experience. So you have to be able to set that out in their language and in terms of, well, what's the actual challenges that are there. And typically we see uncertainty from two areas. So one, can we actually achieve the goal that we're setting out at the outset of the project? Do we know at the outset whether it'll be even possible to achieve this objective that we're trying to achieve? And the second is then looking at, and it's probably, I suppose, more realistic or certainly more commonplace in terms of what we actually see in terms of claims. It's looking at, right, well, are there alternative methods that could be achieved? Are there cost constraints? Are there issues with reliability, repeatability? Can it be scaled? We've got work, it's been undertaken in a research environment, that's fine. Can we actually implement that in a real life scenario? And that's where the amount of time that goes into a project will increase. The overall cost associated with that as you're trying to scale up the development, they'll all increase at that stage. And it's only when you've actually proven it out on a larger scale that you've resolved that uncertainty. I suppose the main point as well is, like, when we were setting this out, it's always from a technological perspective. It can't be from the business perspective in terms of, is this challenging? Is it going to cost too much? Will we be able to get financing for it? they're not relevant from revenue. Revenue doesn't care about the business challenges associated with it. They really just care about it from a technological perspective. So I suppose the important things around this, when you're looking at a project, sometimes it's easier to set out, right, these are the overall goals that we're trying to achieve with the project. I suppose, can you link those advancements and those, I suppose, objectives for the project can they be linked back to the technological uncertainties associated with it? It's possible to have multiple uncertainties with each advancement that you're seeking to achieve. And what you really want to do is try and set it out as much as possible to try and stress the uncertainties associated with any of the work that you're undertaking, because that's what I suppose gives revenue more and more confidence in terms of the qualifying nature of the project then that's been undertaken. Because ultimately, when you're trying to describe the project to revenue or their independent expert they've appointed, you want them to walk away being clear in terms of, look, this was highly challenging. It hadn't been done before, either been done before or been done in this way before. And it's definitely R&D. Like that's the point that we want to try and get across, is showing that challenge, the uncertainty, and then showing that it's all linked back to revenues qualifying activity, or sorry, qualifying criteria that are set out.
And look, it goes back again similarly to, and you kind of probably asking us why we're using these words. We're using these words because they're specifically legislatively defined. Like an uncertainty is, well, what's making it harder? What's making this harder to achieve? Essentially, it's a challenge. It's a risk. It's a difficulty. It's an unknown. It's probably multiple different things layered upon for a particular scenario that you're trying to work within that make this more difficult than it otherwise be. Otherwise, like when I was talking about the advancements earlier on, I was talking about fully contextualizing it for the exact scenario that you're trying to work on. All of the exact elements and pieces that you're trying to achieve are derived from why you're trying to achieve it, how you're trying to achieve it. Each of those different conflicting challenges or elements are your technical uncertainties. We just need to frame them from a technical perspective on why the project is more challenging because of X, Y, and Z elements. We need to define all of those elements. We think about it as we're like, if we have one variable in delivering an overall event, and that's the only thing we have to worry about, it's not as hard as having 50 different variables and all of them have specific parameters that are going to change the overall final advanced position that we're seeking to achieve. We need to define all those variables. All the variables are probably uncertainty, and the more interrelated, conflicting challenges that you can define from a technical perspective, the more clearly more clear and obvious an overall advancement has been sought to be achieved, because a technical person in that field will come out, understand what you're trying to achieve, understand all of the variables and elements that make this complex, and will appreciate the challenge that you face and recognize the fact that R&D had to be undertaken in order to achieve the overall objectives of the project. A lot of where we see a lot of companies fall down claiming R&D tax credits is they just don't really go into they don't go into the weeds of it. They don't define all of the reasons that this is hard. They give one or two high level reasons, and then we're trying to do this and we haven't done it before. And it's the way that they contextualize it more so than the fact that it's not R&D that they'll fall down from a technical science perspective. Really, what you want to think about this is purely from an engineering or a science perspective, or what are you trying to do and what makes it hard from a technical perspective. Defining all of those will often make the reason R&D has been undertaken perfectly clear and perfectly valid, that actually there was nothing publicly available that would just plug and play in and deliver this solution. There is clearly a technical advancement achieved by carrying out all this work, and actually new knowledge has been generated by overcoming all of these conflicting elements and difficulties in this project.
So I suppose trying to bring it back down to, that's the qualifying criteria. I suppose what types of projects do we see in the industry? And I suppose, as Cathal said, this is an area that's probably underrepresented from revenues perspective in terms of the overall number of claims that are made. Like if we're looking at about 1,500 claims across all industries, Construction is very small within that. So it's really looking at other jurisdictions. What are we typically seeing in terms of the projects that are there? So the first one, and this was very relevant in terms of the audience here, and I suppose the research center that's being developed here with Construct Innovate. So, are you undertaking any work with academics? Is there, a formalized, structured project that you're contributing towards? Because if you are, there's R&D within that. And, even if it is Enterprise Ireland funded already, there's still the potential to claim additional costs as part of an R&D tax credit claim. Are you looking at newer improved kind of construction techniques? So are you looking at new methods to actually reduce costs, reduce the amount of time being spent on the project? Have there been changes to, regulatory conditions that mean that new standards have to be met? And are they having an impact on the overall project itself then? The work around that in terms of, developing new processes, new techniques, there's potential to make an R&D tax credit claim around that. Looking at material sciences, so are you adapting materials again? New specifications that have to be met? Are there new materials that are coming on stream? Are they impacting on the way that you work? Are these new novel kind of demolition techniques? Are you working in a very challenging environment for a project that's going to have specific criteria that has to be met? That's going to be different to what you're already undertaking. So I suppose anything really around a project that's going to be outside of your norm, anything that's going to require a lot of upfront engineering, a lot of design to be put into it at the outset, that goes beyond routine, engineering for yourselves, then that's an area that you should really be considering. Are you documenting the work around that? Are you documenting the challenges? Can you identify how many team members are on it? What kind of input they're required to put into it that goes beyond routine, engineering and work that's already been undertaken? These are the things that you're going to have to consider around it.
Look, these are just very high level examples. Like every project has to be assessed individually against, I would say, the first level to the advancement and uncertainty criteria. Like, as in just asking yourself, would I stand in front of an academic in this space and credibly say to them, look them in the eye and say, we're looking to achieve a technical advancement here by resolving technological uncertainty. The red face test is what we call it. Like, could you say that without going red and feel a little bit embarrassed by the statement? If the answer is yes, then you probably have an R&D tax credit claim and an qualifying R&D tax project. If the answer is no, probably best to steer clear of it. That's the fundamental assessment. And we can give different examples, but you guys are all working on your specific projects. There's obviously an infinite number of different things that people are working on every day. Part of what we do is help them structure their thought around, does it fit within the framework and does it not? And I suppose what we do is we highlight when we would have concerns over the qualifying nature of projects.
And then once you've identified, what your project is, what areas, what activities can you actually claim then? So I suppose the important thing to note here is that if we look at it over the development life cycle of a project, you're going to have the outset of the project where you're not sure what the challenge is, and you're going to have some research that goes into defining, the parameters of the project, identifying what work needs to be undertaken, kind of general project management work that needs to be put in place. And they tend to be falling outside of the qualifying criteria. What happens then is once you've identified what the challenge is, that there's no solution readily available on the market, and that you're going to have to start completing R&D activities internally to resolve this, or working with partners to resolve these challenges, then the work within that is qualifying or potentially qualifying R&D. So, the engineering studies that are being undertaken at that stage, from design through to development and onto testing, the project management of those actual activities themselves, testing activities, the construction, building prototypes, doing all of that kind of engineering work. That's all the work that revenue wants to see that you've undertaken time to identify, how much time was put into it, what was the qualification of the team members who were involved in the project, what were the overall challenges that they were trying to resolve. they're the things that need to be documented. They're the things that revenue are going to pass some scrutiny on if they ever do audit the claim. And then at the point where you've got to a stage where you're confident that you've resolved those uncertainties, that's the point where your R&D ends. If it's a case that it's scaled up and new challenges arise, even though you think that you've I suppose cleared all these issues, scalability always has an element of uncertainty associated with it. If there's new challenges, then that feeds back into that loop in terms of your design, development, and testing again, and those costs can be claimed. But what we really want to be able to do is show to revenue that, look, we've undertaken analysis of this, we've got supporting documentation that can support all of these activities and all of these related costs that are there. The work wasn't routine. This is a clearly defined R&D project, and these are the qualifying costs associated with it. And as I said, we've kind of touched on this a few times, but good governance around the project, putting structures in place in terms of due diligence, in terms of capturing the process associated with the project. Are you recording people's time? Are you recording challenges associated with the document or with the project itself? Are there project plans in place? Have you got clear records in terms of project goals, in terms of any testing that's there? Have you got results of those projects? Are there clear next steps resulting from those results? Is there decision making within that? If there's any of that work that's there, that needs to be retained, kept in support, because revenue can go back 4 years and look at these projects. If you look at it, you've got 12 months to file. That's work that could have happened 5 years ago. You need to make sure that you've got that documented, retained on file, some sort of a date stamp, and make sure that revenue are going to be comfortable enough if they ever do come to audit it, that you've got that information there to provide them.
Yeah, and look, this is it's kind of heartbreaking sometimes when we get involved in companies that, like, especially SMEs, so smaller companies who clearly have carried out R&D. They have a project, they've done something innovative, they've done something new, but actually when you go in and revenue come to audit them, we tend to get a phone call late in the day, first time we'll ever spoken to a client saying we're in trouble with revenue on an R&D tax credit claim, and they're saying there's no supporting documentation. And you kind of look at the high level technical compliance documents, like, look, that clearly sounds like R&D. You talk to the technical people, what they're doing, they're all highly qualified in their specialized field, they're doing something new, they're doing something innovative, but actually from a revenue perspective, there's no evidence at all that the activity took place. There's not a single document created. There was a small group of 5 or 6 people all sitting in a room, actively working together all of the time to deliver something, have this output, but they can't show that R&D happened. They can't show there was any iteration. They can't show how much cost went into it, how much time went into it, when things started, when things ended. There's no documents at all in existence. From a revenue perspective, they can't validate that what you're saying happened actually occurred. You're going to fall into difficulty. So having project management tools actually documenting what's happening is really important to give revenue a certain level of comfort that what you're saying occurred, and also to allow them to quantify costs and to show that the costs included are valid. And if you don't have it, like, it is the Irish Revenue, it's different from Enterprise Ireland or the IDA or any of the grant awarding bodies. Their job is to give you money. The Irish Revenue's job is to collect as much tax as possible. It's putting them in a position that they don't normally like, handing cash back to people. So it's a slightly more onerous process to make sure you're complying with what they want to see versus other state bodies whose job it is to give out money. So be aware and understand that when you're looking at claiming this, but at the same time, it's the most generous incentive that we have. So you will get more from R&D tax credits over the life of your company than you ever will through grant funding from any granting body. This is where like 30% of the cost, irrespective of pre-approval, irrespective of what happens, as long as you keep contemplating these documents, is a very significant benefit. Revenue, we know, is a very significant benefit. They expect you to put some level of due diligence and effort into earning that money from their perspective. So just be mindful. If you put in a claim with sufficient underlying documentation, they have no problem taking it back and charging you interest and penalties on top of it. So it's while we're saying this is great, like and there should be more claims in the construction sector compared to what we see. Do it properly. don't mess around with it. I don't like getting a phone call from a CEO of an SME, a good Irish indigenous company who's built something new and interesting, who's in a massive amount of stress because they're in trouble with Irish revenue. That's not. We like to engage people early, make sure they're set up correctly. It's much cheaper in the long run for you to engage people in that way, and for us to help you before you get into trouble than it is to try to fix a problem after the fact, and it's a lot less stressful for everyone involved.
I think if that hasn't frightened anyone off it, hopefully.
Off the call, but look, it's always important to contextualize it. And look, the other thing I'll say is we've left all of that incredibly general. Like, you must be looking at us now going, well, like, how does this fit to my project? We have to leave it really broad because all you guys are working on totally different things, and we can't delve into any one specific point on a webinar like this. But that's the overall framework that we operate in, and you have to operate in, and we want you to think about it. You need tax advice in this space. You can't just wing it and hope it works out well. You need to get proper advice and proper structure. You need someone to look at it and make sure it's all credible and fits within the framework. Any advisor is always willing to have a chat with you. So if someone comes to me going, I have a project, I think it might fit with an earning tax credit, can we have a quick chat on it? We'll always have a quick chat on it before even quoting for the work. So it's important to feel comfortable to actually just set up a meeting, have a chat. Like it's if we talk to you for 5 minutes going, look, that's definitely not R&D, that's the end. There's no fee, there's no charge. If we have a chat, we're like, look, that sounds incredible, that sounds really credible, we'll talk about a proposal and the funding and how much that will cost to claim and all the rest and likely benefits, and we'll give you approximations before ever engaging. So ask for advice, and don't try to do this one alone. Your local accountant won't have any level of expertise. We have a team of soon to be 20 people, all engineers, science professionals that specialize in this as our almost the entirety of our job. And we've been all doing it for 10 plus years. It's subjective. We know broadly what industry looks like. We know what revenue look like. Your local tax accountant won't do this. And in fact, if you talk to them, they're likely going to say to you, it's very high risk, don't go near it. And that is true unless you get proper advice. I say, if you're not going to get proper advice in the space, don't claim more any tax credits. You're going to need specialist advisors in it. And if you don't have that specialist advice, unless you're really close, like an academic spin out or a university spin out that's clearly in the R&D space, it's probably not worth taking rolling the dice on it, because the longer term costs and the penalties and interest that you can incur for getting it wrong are significant and potentially really damaging to your company long term.